Welcome to Asian Economy Channel. I'm Antony. According to recent reports, the United States has reached a preliminary agreement to address the debt ceiling issue. The drafting of the bill is expected to be completed by May 30th, with a vote planned for June 1st. While the agreement aims to extend the debt ceiling for 2 years, analysts caution that signing the debt ceiling agreement could trigger a more hidden but intense crisis. Renowned U.S. economist Nouriel Roubini highlights that the recurring struggle over the debt ceiling impacts the country's currency and weakens global confidence in its ability to repay massive debts. This situation has caused systemic damage to the U.S. dollar and U.S. Treasury bonds, which could lead to an economic recession and potential bank collapses. Several significant events indicate that certain parasitic financial entities representing U.S. interest groups have eroded the foundation of the U.S. dollar and U.S. Treasury bonds. The decoupling of the U.S. dollar from gold signifies a weakening of its value and credit. The trust and value of the U.S. dollar have been diminishing due to the recurring debt ceiling crises. Global confidence in the U.S. dollar and U.S. Treasury bonds is declining, and U.S. allies are recognizing the importance of selling off U.S. bonds, investing in gold, and reducing dependence on the U.S. dollar. Moreover, the irresponsible monetary policies implemented by the Federal Reserve have prompted central banks worldwide to shift their focus toward other currencies or gold-backed digital currencies for de-dollarization purposes. The accelerated liquidation of U.S. Treasury bonds by global central banks, increased gold purchases, and de-dollarization efforts by major oil-producing nations in the Middle East indicate that the process of resetting the U.S. dollar as the primary global reserve currency has already begun. This demonstrates that the U.S. dollar, lacking a gold standard, has an expiration date. Gold, with its intrinsic monetary properties, serves as a natural currency. Arkansas and 26 other U.S. states have recognized gold as legal tender, making it a universal currency for debt repayment. These measures remove barriers to using gold for debt repayment and interest payments, indicating a return to the monetary value of gold in U.S. history. Texas is also accelerating the development of legislation to establish gold as legal tender on par with the U.S. dollar, proposing a gold-backed digital currency as an alternative to the current U.S. debt issuance mechanism. Texas plans to issue a gold-backed digital currency, allowing consumers to exchange it for gold to restore confidence in the U.S. dollar. The proposal by advocate of the gold standard, Alex Mooney, demands full disclosure from the U.S. Treasury and the Federal Reserve regarding gold reserves held for central banks worldwide. Concerns have arisen regarding the safety of gold held in the United States, as lack of transparency undermines public confidence. Central banks worldwide are questioning the safety of their gold in the United States, leading to an increasing number of Americans withdrawing their deposits from banks and accumulating gold coins as a precaution against potential risks. Gold, as an asset that hedges against inflation, protects purchasing power, and generates long-term returns, is attractive to savers. If the U.S. banking crisis continues to spread and the credit environment tightens rapidly, it will amplify financial credit risks within the United States. Major buyers of U.S. Treasuries, including China and Japan, may sell off significant amounts of U.S. Treasury bonds to mitigate their exposure to U.S. dollar risk, potentially leading to a complete liquidation of U.S. Treasury holdings. In such a scenario, gold is poised to become the trusted anchor of a global digital currency system operating alongside the U.S. dollar. Global digital reserve currencies, utilizing gold and digital currencies, are being pursued by global monetary authorities, reflecting the risk faced by U.S. Treasuries as a core U.S. asset. This growing trend explains China's accelerated gold purchases as it follows the footsteps of global central banks in increasing its acquisition of gold in the international reserve asset domain. Recent data indicates significant gold imports by China, and at least 778 tons of gold have been transported to China from international gold markets since January of this year. The Federal Reserve and the U.S. Department of the Treasury, currently facing a banking crisis and expectations of an economic downturn, are hesitant to refuse requests from various countries to repatriate their gold. They strive to maintain the credibility of U.S. Treasury bonds and the U.S. dollar, not daring to shirk their responsibilities. Thanks for watching. I hope you enjoy the video and analytics from me. Like and subscribe, PLS.